Just a real quick chat. Wanted to point out what I'm looking at here today. So we don't have a lot of market sync, and what I'm seeing here is the Russell keeps bird dogging. Tech is strong. Tech keeps pushing to the upside, but it's being counterweighted by the Russell, right? So like here in these last few bars, the S&P was trying to rally, the NASDAQ was trying to rally, and the Russell just couldn't do anything more than doji and started pulling back down. You notice it's breaking its structure here to the downside. These two are running in sync today. The Dow is kind of just being pulled around by these others. We're not getting a lot of lead from the Dow or the S&P, and the three sectors that I pointed out earlier aren't enough to keep us moving to the upside. So there is strength in the market, in the financials, in the tech, but we just can't get the follow through, and the small caps keep weighing us down. Notice these structures, watching them in sync. We should be seeing everything break through the same levels at the same time when we're looking at sync, and that's not what we're getting today. Here, if I move the line back up, you can see where I was watching the S&P. I wanted to see this line price break through this support level here, break it to the upside. It broke and failed because of the Russell. Same with the S&P or the NASDAQ. It broke and failed again because of the Russell. The Russell, if you match candle to candle, wasn't pulling to the upside in the same way. It should have been way up here at this level, breaking to a high, and instead it was moving down while these were moving up. Notice the bird dog. It's still pointing down, and now the others are coming back around with it. Just wanted to kind of point that out. If you're not familiar with the far right side of my chart, we have the tick chart and the AD, the advanced decline and the tick. When we see these extremes, it kind of points us to the idea that a market's about to pause. When we're looking at the tick throughout the day, if it's in the red, then it's staying bearish. If it's in the green, then it's staying bullish. And when we get cross throughs all day long, then we're just looking at a market that's really range bound and we're not getting anywhere. If you notice, we're staying more to the bottom side than we are crossing through. These are just little spikes. The advanced decline, we really only look at that just to see persistent and consistent trend. We just want to glance at it and see if we're looking at things like this, where it's just a range bound moving back and forth, or if we're looking at a consistent, persistent move like this. Right? We don't try to identify price structure or support levels or anything like that. We're just looking at it overall. If I zoom out a little bit here, you can see what we're looking at on the day. We are in a range-bound market, but we just want to look at it at a glance and just identify what it's doing. Are we advancing? Are we declining? Is it moving in a trend, or is it consolidated? So if you're looking for an entry, you want to see how the Dow is moving down to this bottom side. It's going to try to balance there for a moment. If it breaks to the downside while this breaks, notice everything's coming down to that level. We want to see market sink. It's okay to wait for that. You wait for that, you go in big, you take a small position, just a scalp, right? Let the S&P come down to this level, let the NASDAQ come down to this level, and the Dow come down to this level, and then when it breaks to the bottom side, you jump in with a small target, right? And if you don't get that, then you don't have your entry yet. You're waiting for confluence. You're waiting for everything to either break to the upside or break to the downside. You can see the Russell, it's in a consistent, persistent trend. The S&P is not. It's showing you a bear flag. There's your flag. There's your flag pull. The same with the NASDAQ right there. There's your pull, flag, and the Dow. There's your flag, and there's the pull, right? So you want to wait. You're waiting for the bear flag to continue lower on all three of these, for the breakout to the downside, in confluence with the Russell continuing its down move in the channel. All right, just wanted to point that out so you understood what it was when I'm posting these charts. You can see what I'm focused on and why I'm focused on it.